Good day, everybody, and welcome to another edition of Market Outlook. I'm going to be doing
good day, sir.
I'm going to be doing detailed analysis of the market from both fundamental point of view and technical point of view. All right, and I'll be telling you my bias, for each and every major pair I trade against next week. Okay. So, but I would like us to start today in a special way. I want us to look at the fundamentals and see what is happening there. Okay, I want us to see the fundamentals. So, I love trading economics. Okay, that trading economics, you go to news, you can read what is going to happen ahead. You can see United States week ahead. It will be the busiest week of summer in the US with the Fed decision, Q2 GDP growth rate, and earnings report for more than a third of S&P 500 companies taking center stage. Also, Eurozone largest economies, including Germany, France, Italy, and Spain, will be publishing key reports on growth and inflation rates. Can you see? These are things that will shape your opinion against next week. All right. These are things you must read. You see oil extend losses. Paraguay, we don't trade anything Paraguay, so I don't read such news. You can see this commodity, oil extend losses. Can you see? Oil extended losses for a third consecutive session on Friday with crude bottoming around the 95. Of course, you know that when crude was 120, I forecasted that it was going to come to $80 before it will pick up from there. I think it's getting close to that level now. Okay. Per barrel mark went down by lingering fear of a demand sapping global recession. You see, when there is global recession, which we are beginning to feel that there might be global recession. Why are we feeling that there might be global recession? Of course, you see that there have been increase in inflation. All right. And because of the increase in inflation, all monetary authorities of major economies of the world have decided to increase their interest rate. Even European countries, Eurozone, that have kept their interest rate at 0% for a very long time, are beginning to jack up the rate. Do you understand now? So the implication, I consistently tell you in my channel, that the implication of increase in interest rate is that you will achieve a fall in inflation rate, but then you are going to, harm the investment environment because the cost of borrowing will be considered too high. So there will be no business expansion and GDP will fall. So that is why there is fear of fall in GDP of major economies. But then if GDP falls, what do you think is the consequence? Okay. If industries are not increasing their capacity and everything, what do you think will happen to demand of oil? Demand for crude oil will drop. And if demand for crude oil drop, of course, you know that the price will drop. So the drop in the price of crude, is a reflection of the expectation, consumers or investors' expectation of possible recessions in US, in Eurozone economy like Germany, France, and United Kingdom. Do you understand now? So this is a website you come, you read the news, you study the news, you see what experts are writing, and then you get informed. Okay, so we're expecting all these key decisions next week. Then I also try to, if I want to trade a particular currency, that is when I will try to, check the countries. I'll check the countries. If I want to trade USD and maybe JPY, USD, JPY, I check USD. I look at the current fundamentals, the interest rate is increasing 1 to 1.75. I look at the trade balance. You see the trade balance minus 86686. This is dropping, marginally current account is still negative. You understand? You see government debt to GDP, among one of the highest in the world. United States of America is heavily indebted from 128 to 137, percent of GDP. That is too high. In my native country, Nigeria, it's only 25. That 25 or 30% to GDP. And the US is 137 to GDP. But of course, the difference is that United States is able to pay back. They have the infrastructure, they have everything it takes to pay back their debt. But in my country, we don't have all to pay back, okay? So business confidence, you look at all these things. These are things you look at before you start your week. But then, let's just go straight to our analysis. And we start off from where we left it last week. Last week, if you study the video, I told you that DXY will correct downward, and you can see it yourself. In daily time frame, it's correcting downward. So what are we expecting next week? Okay, what are we expecting next week? You can see that right here, real quick, guys. You see that here it was going upside closely. When you monitor this upside closely, and you see that the way it's going to the upside is no longer as strong as it used to be, then you can decide to check if there is divergence. And if we see it, you will see that there is if you look at this structure here, you see that there is divergence here. Okay, this high, this last two pushes to the upside, if you check it on the corresponding level of the RSI, you see that this one is making a lower high. Okay, why this one is making a higher high? This is a divergence already. This tells me that I'm going to have a fall of DXY. And at this stage, at this level, I communicated to my community to be careful of how they trade, because whenever DXY go into correction, market behaves erratically. Okay, and that is the time that retail trader lose a lot of money in the market. Okay, but right now, since we know we are going to go downside, and of course you see here that you already achieved a break of structure. This is broken right now, so all we want now is correction for more downside. Okay, so how is the correction going to come? Okay, you now take the fib. You know how we do it. Take the fib of this impulsive leg to the downside, target 50 to 61.8 or 78, depending on the nature of correction. Right here, the area that I suspect that this guy will turn is here, because we have supply zone here, and we have another key supply zone. If it doesn't turn around this level, it's going to come over here, guys. Over here, guys, because this is a structural level. This is the supply area that corresponds to the structural level. Then from here, we'll find a sell opportunity to the downside. Minimally, when DXY is selling at this level, it must get to this level. Can you see a big demand down here? It must get to this level. And if you want to take equal leg between with A, this is A, this is B, and this is C. If you want to consider to see equal leg between these, you pick a trend-based fib extension, drop it here, and then you're having exactly 1.0 here. Okay, at this level, you will have achieved a three-wave corrective structure, and we look for buy opportunity to the upside, depending on how we achieve a push down here. Okay, if you look at the push down of these two waves, okay, and you go to the divergence, and you are not seeing a divergence, what I mean is this: you see your indicator. If you are seeing something like this, a push down coming up and a push down, if you are seeing a higher low here on the indicator, but you are seeing a lower low between this impulse and this impulse, if you are seeing a lower low here and you are seeing a higher low here, then DXY is going to make a push to the upside. It's as simple as that. But if this one is not there. Let me clean up this. If you look at this, and this push to the downside, make a push on the RSI here, and this one here make another push and making a lower low here. Then you see here this push and this push, you know, lower low here, lower low. That means we are going to have a corrective structure here, and that's why we continue to push downside. And in that case, your GBP USD, Euro USD will continue to move to the upside. Do you understand now? But I want to believe that it's most likely that we are going to have this further push to the upside after this corrective structure. Why do we think we'll have further push to the upside? The reason is simple, guys. If you look at weekly time frame on DXY, you see that DXY is bullish. Okay, it's bullish because oftentimes I show you this is a corrective structure for this upside. Okay, and because of the Fed increase in rates and all those things right now, I don't think DXY has much time to correct on a big scale. Okay, it doesn't have that time right now, so we might just see a correction, a three-wave correction, and the market coming to this big supply. This is a big imbalance candle. Want it to come down, push up, come down, then from here move to the upside. Okay, but how this push down happen is what is going to determine whether we achieve this upside, as I explained to you, if you use the divergence test. All right, that's what will determine whether we'll have this upside or we'll have correction here for more downside. So that is DXY giving us the idea of what we should expect from the market. Then euro dollar, guys. Euro dollar. Okay, somebody was asking me in the group what is my view on euro dollar. I told the person to come to our weekly outlook. There we'll give detailed analysis of all the pairs, and right now we're on euro dollar. If you look at it very clearly, you have this impulse, you have this three-wave correction, and then you are having this continuation move to the downside. So it is obviously bearish, in line with the existing fundamental reality that euro will have to be weakened at this point in time. Okay, the reason why it has not probably fallen is because, you know, they increased their rate from 0 to 0.75. Okay, so obviously this is a clear bearish chart. Okay, this is clearly a bearish chart. But if you look at this leg, you know, after this correction, you have this push down. This push down refuses to break the low. You have correction, you have push down. This push down eventually break the low. So what I do in this case, what I do is simple. Okay, what I want to do is simple. I want to look at I don't want to, you know, I don't want to take part in anything concerning this pair until I make adequate pullback of this leg. I want to see how this leg, you know, react, how it corrects back to its structural area on a higher time frame. And you can see right here, we're having a big imbalance candle here. Okay, we're having a big imbalance candle right here. So it suggests to me that most likely we're going to have, you know, EU correcting upward to that level. And then again, if you come back to lower time frame, we can see clearly how it's trying to navigate that level. Okay, you can see how it's trying to navigate that level. And that was why I told us in weekly Wednesday live session that those that were attempting to sell EU should think twice, because any sell at this level is not going to push down well. It will only push down to peak liquidity and up again, because for it to go down very well, it has to induce very well to the upside. Okay, so now what I'm expecting is that for it to go to that side, I want to take a fib of this leg. Of course, for some of you that are just new in trading, you will see that when a structure, after a much push down, is giving you this structure, this is what is called end of structure, okay, behaves as end of structure. And if you take your fib, you know, and plug it this way, if you check, you will see that there's a big divergence. This market is pushing down, making a lower low, lower low, lower low, lower high here. But if you see on the RSI indicator, you will see that it kept making a lower, a higher low, higher low, higher low. That is a proof that this upside is going to come, okay? But if peradventure you have missed this main impulse, this has become an impulsive leg to the upside, this one, which broke structure, okay? You know, many people, they'll just see, when you see a move up, it's not just enough to say it moves up. That is an impulse. Does it break a structure? Okay. Does it break a structure? Yes. Look at the structure. Look at your last resistance. It's taken. So if it's taken, then this is an impulse, and this is the corrective phase. So if you take a fib of this impulsive leg now, you will see that this is just 38. So even though we don't want to sell euro dollar, we don't also want to buy at 38% fib retracement. We want a better, you know, a better discount on the buy of euro dollar. So that is why we'll be anticipating for it to come to around this level, okay, around this level. Why this reaction has to come here is because of this demand area. You have big demand area here. Can you see big imbalance candle? So that's why each time the market come down to within the imbalance candle, it shoot up. Each time it come back, it shoot up. But we want this imbalance candle to be invalidated, and on that occasion, we are going to see a pulls down to this area, okay? And this will have made a complete structure. It pulls down, a three-wave structure in the middle, and another pulls down. So if you have it this way, fine, fantastic. We now look for a buy opportunity to the upside. Where? To hit this high, okay? You remember, we are looking for correction downward for euro dollar. In DXY, we are looking for correction upward. Is that okay now? So from this level, we target this anywhere, any psychological level here, maybe 1.000, that is 1.000, can be that area. From there, we move to the upside, targeting where? This imbalance area. Can you see? That's where we would like to sell euro dollar. You know, I've been saying it for quite some times now, about 3 weeks now, that we need euro dollar to come up. We need pound dollar to come up for us to be able to sell them very well. That if they don't come up, it's not going to be easy for them to have a better sell. Is that okay now? Another test we can perform by the time this guy gets to this area is to look at the previous impulse before the correction. Where is it? Let me just do some cleanup. This is a previous impulse. Okay, if we have this corrective structure here, and this market push to this area, then we are expecting this push downward. So what I do normally is to check this area, guys. I check this level and I check this level. So I want to carry out, you know, hidden divergence test of the two levels. If on the indicator, on the RSI, if I have something like this, or the stochastic, if I have something like this, let's say this is upside, okay, and this one is far upside. Can you see from this level to this level is giving me a lower low? But can you see from this level on the indicator is giving me a higher low? So if this point is high, is higher than this point, I also expect that this point on the indicator should be higher than this point. But how come do we get the reverse? The reverse is that the indicator is telling me that here I'm going to achieve a greater push to the downside here than here. It's only telling me here that it has given me a premium price, a better price here to sell than here. Even though this price is higher, but I'm going to achieve a better push to the downside right here than here. That's what it means. This is what is called bearish hidden divergence. Is that okay now? So that is our expectation for euro dollar. Okay. I also have a lot of interest on Euro GBP, even though it consolidates a lot, but when it wants to push, it will definitely push. I want to see that we form expanding flat for this structure before we have a push to the downside. And where is the expanding flat coming from? You see that right here, you have three-wave structure to the downside. Excuse me, three-wave structure to the downside, which I've shown you here. You have A, you have B, you have C. Here, we want to have a three-wave structure this way. Okay. You want to have this three-wave structure to break this top, and then you now have these three waves here will now come over here, 1, 2, and 3. That is the structure I'm looking forward to in Euro GBP. And you can see that this time around, we have a big demand at this level. Can you see big demand at this level? So I would love this pair in the long term to come to this area to take liquidity from here and move to the upside. This will be a very balanced structure, guys, because if you take the fib of this push to the upside, this is the exact area that you are coming to the right structural level for more upside. All it has been doing here is a retracement to 0.38. Okay, it's not been given a valid, order, a valid order for it to push to the upside. It's been retracing. It's been retracing to 0.38. So we are expecting this pair to retrace to 0.618 this time around, taking advantage of the current situation in the Eurozone economy. Okay, and possibly if we have recession in major economies like Germany, like France, and so on and so forth, due to the hike in rates due to inflation, then possibly probably energy crisis. So possibly we could have this market descend lower, euro descending lower against the pounds. Okay, so if this is the structure, just pay attention. You see that we want this to go a little bit higher on a weekly time frame. So if you go to higher time frame, you can see a structure that is depicting that that higher formation we are looking at. If you look at it very well, you will see that this wave to the upside, this is a corrective structure, expanding flat. This 1, 2, and 3. Do take note of that. Then you see another one, A, B, and C. This is going to be a middle structure. So we want the replication of this initial 1, 2, 3 to come over here, 1, 2, and 3. And by the time it come over here, it will have formed expanding flat in what? In weekly time frame. Remember, we want to have expanding flat in weekly time frame to pick liquidity in the imbalance here. You have a lot of imbalance here. Pick liquidity there before we move to the downside. Do you get now? So now in 4 hours time frame, I'm looking forward. I'm looking forward to having a complete structure here. If you can have a corrective structure here, then we should have a push to the upside. And let's check from our indicator and see if this actually depicts what we are looking for. If the upsides will come from here, can you see? Okay, if the corrective structure is over here, then we should see from the indicator. Look at the corresponding part of RSI. Can you see? A lower low. But this is making a higher low. Look at it. Look at the push. Look at this correction. What you are going to use to know if this correction is over is simple. You look at this push down and this push down. If you check the corresponding level on the RSI, if it's making a higher low here and it's making a lower low here, then it's giving you a better price to buy. Okay, that's what it means. So here should have been our entry, and then if you miss it from there, that's not a problem. Then you have to look for another structure to buy. And where's the structure? Let's do some delete. This is quite simple. Okay, you see it here. You see the impulse, you see the correction, you see the impulse, you see the correction. We took this trade in my group, my signal channel. We took it up and then it flows down again. So all I'm expecting now is that if we have to achieve a greater push to the upside, you see that all these pushes now are not great pushes. Okay, so what I will expect is that whenever you have such situation, you should take a fib of the whole structure, okay, and expect a corrective structure back at 0.5 to 0.618. That is where it will achieve a greater push to the upside. Is that okay now? So if you look at the structure that we're having now, and at that 0.5 to 0.618, do we see a demand area there? Yes, very clean one. This area, you see the way the market move up sharply. And do we see any psychological or sub-psychological level there? Yes, 0.8450 around this area. Yes. Can you see? We're expecting the market to shut up to the upside, but no action here right now because this is a single wave. Okay, this is a single wave, and once it's completed, you are bound to have a three-wave structure based on what Mr. Elliott taught us. After 5-wave impulse, 1, 2, 3, 4, 5, you must have 1, 2, 3 back to 50 to 61.8 before you move to the upside. Is that okay now? That's exactly what we are doing here. We have achieved 1, 2, 3, 4, and 5. Okay, let me do it cleanly. You have achieved 1, 2, 3, 4, and 5. You are looking for 1, 2, and 3 before you achieve 1, 2, 3, 4, and 5. Do you understand now? So that is a euro dollar, pound dollar, euro GBP. You know, pound dollar. You know, I told you in Wednesday live session not to follow the crowd to sell pound dollar. Do not follow the crowd to sell pound dollar. And what did I see? What did I see? And why did I talk like that? And what did I see? You know, we saw it clearly that DXY was making a correction to the downside. And if DXY is making a correction to the downside, it then means that there is some weakness in USD. And USD cannot be weak, guys. USD cannot be weak, and you are expecting pound dollar to be weak. You are expecting euro dollar to be weak. No. So they have to have some strength. That is why we're now saying, okay, if that is the case, we are not going to join the crowd to sell pound dollar and euro dollar. We are going to wait for them to retrace to acceptable level of correction before we look for buy opportunity. And then if you look at it, even on daily time frame or weekly time frame, you see that it's bearish. Okay, it's bearish because this whole structure here, guys, the whole structure here will have to go down. Okay, but does it go down on a straight line? Oh no, it doesn't go down on a straight line, guys. It has to at some times correct, and for it to correct very well, for it to push down very well, it has to correct significantly. Okay, and if you look at this end of structure here, this level, if you look at the corresponding level on the indicator, you will see that we're having a perfect divergence. Okay, lower low here, and then here you have higher low. Can you see this one is moving down, this one is moving up? That tells me that the volume to the downside is not there again. Rather, we have to make a move to the upside. But because the weekly and daily time frame is totally bearish, we know that this divergence we are having here is not a reversal, but a just mere corrective structure to the upside. Okay, and then thankfully you have the move to the upside, and then you have the impulse, you have the impulsive leg. What do? And I have told you, whenever you see impulsive leg that breaks structure, it's a very significant one. Look at this resistance. Look at the way it broke it with this imbalance candle. Can you see? So in that case, it will be valid for you to take a fib of this impulse and target the market coming back to 50 to 61.8, depending on the nature of the corrective structure. So it can come to this area. Okay, this impulse, this correction, we have another impulsive leg. That is A, B, and C. Then you have a push to the upside. Where is it going? Where is it likely to stop in the upside, guys? We look left. First, you have to check the equal leg of this wave, equal leg of this wave, you know, and this wave. We want this leg to be equal. And if we take trend-based fib extension, look at it this way. If it comes to this level, you can see that around this level, it will give us a reaction. But if you look at it very well, how I used to guess the area that will get a reaction is I look at this level. After this level is clear, where do you have supply here? Where do you have supply here? Okay, if I choose this supply, I'm seeing that this supply is too close to this level. So it will, for this to make equal leg, it will clear it to the upside. So where I'm targeting now is this supply. This is the logical level to target for GU to make a reaction to the downside. And of course, if it reacts at this level, this structure still make a perfect sense. That could still be a running flat. And at the same time, it could also break it to the upside and react at this level. So you just have to wait to see the level is going to react from. But I'm very sure if nothing fundamental happens over the weekend, this corrective structure will push up. One more push up before we move to the downside. Okay. Then GBP card. Okay. GBP card weekly. Okay. You know, in weekly structure, we are still, you know, biased to the downside. We are still biased to the downside. Okay. Before this upside, we come here and then you now make a move to the downside. That's just the simple, you know, forecast of, GBP card. But right now, I've told you severally, even if we are forecasted a downside, it doesn't go in a straight line. It must have to correct at some point. And we are beginning to see a structure that depicts an ending structure. Okay, if you look at it, where this way, can you see there's already a divergence? You know, already a divergence. So meaning there is no momentum to the downside right now. We rather want to push to the upside. But the major problem is that if we want to push to the upside, where are we to get in? Where are we to get in? You see, where are we to get in? You see, the market is just consolidating. It's consolidating. Okay, consolidating lower low. Can you see another lower low? Okay, it can make something like this, another lower low. But one thing I want you to know is that every potential low, lower low here is a buy opportunity to the upside. Every potential low is a buy opportunity to the upside. You see this low, when this come lower, what happen? Upside. When this one come lower, what happen? Upside. When this one come lower, what happen? Upside. There is one upside that will come, okay, that will take up all this level. It will take it up. And if you have gotten in from every potential last low, then you have no opportunity. You have opportunity to break even and even secure profit. Because if it break this structure and eventually come back to 50 to 61.8, it does not touch your entry because you have broke even here. That is the importance of getting into a trade at the right time. At the right time, it keeps you in that trade, you know, for longer time. Do you understand? But supposing that you carry out divergent test, and instead of you seeing a higher low here, you are seeing a lower low, like here. You are seeing this kind of thing, this kind of structure here. If you are seeing a lower low here and you are seeing a lower low here, do not even contemplate, you know, upside for G card. You rather look at a corrective structure downside, okay, more correction, and downside. That's how you look at it. You know, it's theoretical. All right, it's theoretical. Do you understand now? So that's how it is. We may not get enough volume on Monday to push the pair to the upside. It might still go for one more downside. You see a big supply right here. See big supply right here. It might just correct, come to this supply, come down, take this equal low, and then from there short up, correct, and upside again. Do you understand? Because we are beginning to see the sign that that move will happen. And where is the sign? Look at the sign here. This is not a small move, guys. This is a big move. Okay, that gave us the sign that with a move to the upside is likely for this pair. And I've told you what you need to see to achieve it. And there's no way, if the structure begins, there's no way that it won't get to this area. Okay, it might even break it to form expanding flat, and then it will move to the downside. That's how you look at a GBP card, guy. GBP JPY weekly. If you look at GBP JPY, guys, on a weekly time frame, you see that it has gotten to a level where we should sell. But for a pair that have taken how many years? Since 2016, 5 years to develop a corrective structure, okay, it's not supposed to start moving down on a sluggish note. No, I expect far much more than what we are seeing in GBP JPY. So if that is the case, if we are not seeing a sharp move like you see here, if we are not seeing it here and it's rather slow and sluggish, then we know that we might just have a correction and further move to the upside. Excuse me, please. Okay, so that is how we are going to look at GBP JPY. So if it's slow and sluggish at this level, there is a structure I will see that will make me to believe that it will not make a move to the upside. For instance, just hold on. Let me take you to lower time frame. It's possible that it will give us a structure like this: up, down, up, down, up, down. It will just deceive people, you know. If it give you a structure like this, okay, from there it can proceed to the downside. But we have not seen, structural development that can pave way for that. Okay, so what I want to believe can probably happen here is a situation where you have this three-wave structure to the downside, then you have upside, and then watch 1, 2, 3, move down, upside, downside, and one more upside again. I will explain to you how I caught the wave. Okay, so now you see the reaction. First reactive leg here, that's the move down. You see this impulsive wave, this particular one is impulsive. That, let's say this is wave A, then this is A prime, this is A prime, then this is 1, 2, and 3, that is B, and then you have C. Can you see? You have C. So this is A, this is A, this is B, and this is C. Can you see? And then this one that comes down, you have a reaction here to come down. Then you see have a move up to break this top. It is after all this is done that you're going to have GBP USD now come down properly for the sell setup. But right now we have not seen sign. It's just building up momentum. It's not giving us sign of a massive a massive shutdown. It's not giving us such sign. Okay, look at how bullish it is here for a pair that we want to move down for 5,000 people. not going to work that way. Okay. So, but now at the immediate, what do we expect? Of course, you see most JPY pairs are falling. Okay, most JPY pairs are falling. And then if you look at it right here, you have a corrective structure here. This is a corrective structure. You have a push up. You must have this push up. Then what gives us sign that this push down will come? Once you see a structure like this and it has completed the equal leg between this one coming back to this place. Can you see at this point you have 100%? Look at it, 100% fib extension. So based on that, you need to check how was the reaction, how was it going up? You know, how was it going up? You need to check whether there was divergence or not. Okay, you need to check whether there was divergence or not. If you expect to see a divergence on 4 hours time frame and you don't see it, you go to another time frame, maybe lower time frame to see, because it's possible that at times in a higher time frame you may not see a divergence, but when you go to much lower time frame you will see it. Look at it here, very clear. Look at it. Can you see lower low, lower high? So here you are getting a higher high, and here you are getting a lower high, and that is a sign of weakness. Okay, it's a sign of weakness that this pair will come down. So all you have to do in this case, if you also go to 8 hours, you see your big candlestick that matter. Look at it here. Look at it here. Okay, in fact, this one even sums up the whole thing. This particular one, look at it here. With this, you know that this pair will come down. And then if you go to 1 hour time frame, you see, you are going to see the impulsive leg of that engulfing candlestick. And where is the impulsive leg, guys? Look at it here. Simple. Look at it here. So if you take a fib of that impulse, small impulse to the downside, you see that you're having your 61.8% retracement here. I see the move. All right. So you can see that this move here, we have gotten it from the move of this balancing of this corrective structure to the upside. They're looking at divergence, looking at not only divergence, we look at bearish engulfing on 8 hours time frame or daily time frame. We came to 1 hour time frame, we saw the impulse, we saw the correction, and boom, to the downside. It's as simple as that, guys. Okay. All right. So that is what are we now expecting in a week to come? What are we expecting for pound dollar? Of course, you have seen that we have achieved a move down that break a major structure. Look at the structure here. Okay, for people that don't understand what I'm talking about, look at, let me pick these two. You see, it's correction, a push up, a correction, a push up, a correction, a push up, a correction. Does it break this level? No. That is a sign that you are coming down. And then the next thing it did was to break this low. This is a break of structure. This is a break of structure. Then any pullback after a break of structure is a move to the downside. Okay. Right now, we don't know the level that this particular wave is going to push down, because if we are taking a fib from this leg to this leg at this stage, we are just deceiving ourselves. What if we pick it that way and we are projecting that this level will achieve a sell and market comes and pulls down? What do? So we need to wait to see beginning of development of pullback before the fib we are taking can have a valid level. Do you understand now? So, but I'm just going to tell you what you are going to do. As soon as you see beginning of correction, take a fib, this level, take a fib, look at corrective structure back to 50 or 61.8. Make sure you check the left-hand side. I cannot really see any supply area here. So it's most likely when it happens that way, what I do is I consider the whole length, not only this one. I'll consider this. Okay, let's say I consider this and I'm having a pullback to this area. This is a valid supply area, guy. Okay, from this area it can fall. But what if you have the first leg of correction almost hitting that area? Then you know that your next correction will take it up to 78. This is how we project 78. It means this supply area is going to be the real one. Okay, then from this area we achieve a sell to the downside. Okay, that is GBP JPY. USD JPY. What did I tell you guys in the trading community? I told you that this was a buy, but I will not be interested because it is very wrong to take a buy setup in a supply area, because of course you see that we have been on an uptrend, and I love to trade UJ so much because it gives me opportunity for a tighter stop loss. It's not too aggressive. Okay, you see here, this is a push up that breaks structure, retracements to 0.5, which to me is valid because you have your zigzag here, you have your impulse here. This is your trade. Okay, look at this one. You have your impulse here. Let me delete the previous fib. Okay, you have your impulse here, and then we had a pullback. Okay, we have a pullback to 61.8. Actually, I was expecting 78 because that is where you have a fair equal legs. But why I jettison the idea of having equal leg here? Why I jettison is that when I look left, I didn't see, you know, a good demand at that level, but I'm seeing a good demand at this level. So that's why I felt that at 68, we're going to have a great push to the upside. And I think I sent the setup to the group. All right. But I said taking a buy setup in a supply area is not too good. It's not a wise decision. It's going to struggle. And can you see how it struggle when it gives us this three-wave structure? What will you think? What should be in your mind, guys, after seeing this three-wave structure? It's simple. You have to look at the correction of this leg down. You see a beautiful three-wave structure that comes to 61.8 to 78 because it is zigzag. Remember, our zigzag will have to come to 78. Can you see from there, boom, to the downside? I just decided to take CHF JPY, CAD JPY, and AUD JPY. I did not take UJ, and you have another move to the downside. So what are we expecting, guys? What are we expecting from UJ next week? Okay, now you have seen what happened. Then what are you expecting next week? What you are expecting is simple. Just make sure you allow this push down to finish. As soon as it finishes, take a fib of this leg, continuation move to the downside. Then look for a corrective structure back to supply area here. See a beautiful supply area here. Okay, this area. Let corrective structure come here, and then you see a psychological area here, 137.50. Okay, that's a very good level that you expect the market to come crashing to. All right, so that's our expectation for UJ against next week. It's going to be a very good trade, depending of course on what happened to, you know, several reports that we are going to get next week. Remember, S&P 500, or what we call US 500. That is the top 500 companies, most capitalized companies in the US. Most of them, almost half of them, will be releasing, or a couple of them rather, will be releasing a lot of reports next week, and this is going to shape, you know, performance of the capital market and all those things. And it also have a ripple effect. It's going to have a ripple effect on forex market investment. Okay, we see how all those, you know, pans up next week. But based on the technical before us, we want to see a corrective structure of this move and then you have this move to the downside, because it's going to be like you are moving up. Okay, right here you are still in the uptrend, okay, because you have not taken this low. But right here, instead of you taking this high, you did not take it and you broke the low. Okay, when you have taken this low, you have taken this internal structure out of the huddle. Okay, and next thing you need to do is to what? Go on corrective structure and head down to take this low here, or this low here. You want to take it down. Okay, just have to take it down first before anything, whether you begin a move to the upside or you continue a move to the downside. And then don't also be mindful of the fact that you can, at every point in time when you feel that structure is complete, you must learn how to carry out divergence test. Okay, this is a push down, this another correction. Okay, so if you go to your RSI, and then for this push down, you see a push down here, and then here, no, let me not do it this way. Let me do it this way. Okay, you have your RSI here. Okay, this point here, coming to this area, push down, coming here, this point here, making a lower high, but on the indicator, making a higher high. So if you see it here, that will further strengthen your the confirmation for at the end of this correction and this push down to the downside. And the push down you will have here is going to be greater than you have here, because here is a premium price, better than this one because it's higher. So even though this one is higher than this level, okay, but the indicator is telling me that this level will give me a bigger push to the downside than the previous level. Okay, so take note of that. So when you have seen end of correction, you need to learn how to carry out some of these divergence tests. Okay, that will help to shape your opinion. The same thing we're expecting here. Before, we're expecting that if we go to daily for this particular market, we're expecting that this corrective structure was going to push harder to break this top. But due to weakness, even despite the fact that there was a rate increase for euro, that did not help euro to climb higher against the JPY. It fell. So it then means that most likely that we may have a structure, we may have an ending structure here. This is exactly at 61.8 and it's coming down. If it ventures make a lower low here, guys, what is happening might just end up to be very simple. We have started trend development for the downside. It's as simple as that. And then what confirms that, guys, you can see the market failed to make a higher high here. Okay, and if you take a fib of this leg to the downside, you see that the retracement level is at exactly 61.8. okay, and if you go down to 1 hour time frame and you go to the circled part, you will see that you have achieved an internal break of structure there. Okay, that is how you get in for your entry. Okay, let me show you, because I also took this trade. Okay, this corrective structure, as it was coming up, going. Can you see? You have taken this low. You have taken it. And then all you need right now is for the market to correct, to correct back to area where it could pick supply for the downside. But this impulsive leg that broke the structure has not really finished. So right now, we cannot take a fib of a move that has not finished. So we need to wait to see when market will start and how it will behave. Then we can take a fib of this leg that broke the structure and target 50 to 61.8, guys. target 50 to 61.8. We'll make sure there is supply. Okay, and then from there, make a move to the downside. So early part of next week, guys, is going to be a couple of corrections in some of these pairs because, of course, we had a massive push on Friday. So for that reason, we'll have a lot of corrections. Okay, but possibly Tuesday, New York session, or Wednesday, London session in the morning, we should be able to have all of them going into continuation move to the downside. Okay, remember our analysis on the UCAD. We want this length of wave here, we want it to appear there. This one, want it to appear right here, real quick, guys. And you can see it's making the same behavior, the same pattern, because we have decided, we have forecasted rather, that this is a corrective structure. This push up is the same thing as this push up. This push down is the same thing as this push down. And this whole structure here has become a corrective structure. And this one right here, guys, has become the A structure. And then this one here has become the C structure. So if that is the case, we want this wave here to be equal to the one here. And you can see that they are behaving the same way. Look at it. After I push up, look at the way it's messing up at the top. You see, after I push up, look at the way it's messing up at the top. So what we need to do when I see a structure like this, I just wait patiently, guys. I want to see, you know, first and foremost, I want you to check. I want us to check if we can, right now, there's no way we can take a buy opportunity because we are biased to the upside, to the downside. And if we are biased to the downside and we are seeing a buy opportunity to the upside, we are not going to take it, of course. So what we want to see now is that after this impulse, okay, this correction impulse, this one, you know, is going to stay for some times here. And at a time, we are going to see a break of structure, okay? I'm going to see a break of structure to which we'll find a correction and then a push down again. Do you understand? Because at the end of the day, this is just going to give us an ending structure here. Don't think USD card is going to make a move now, because this volume that we are seeing here is not enough for us to push down. So it's going to still dance a little while, push up, break structure, retracement, and push down. Because right now, you know, both US and Canada are increasing rates. They are both affected by inflation, and then you should expect that their currencies should consolidate. And of course, they are neighbors, so they share a lot of sentiments together in terms of fundamental. You know, if there's improvement in employment in US, you should expect Canada to also, you know, get some share of that progress. If something bad happen in US, you should expect a backlash on Canadian economy because they are neighbor. So what we want to believe is that this leg down will still come, even though to just come to break this low, it will just come here. Okay, that's when you will see a real move to the upside, because I need to show you something. If you look at weekly time frame for USD card, do you notice that right here, guys, there was no break, This market, that was when I knew that this market was going to find it extremely hard to move to the upside. Look at it, even though it's regular flat, with the understanding of concept of liquidity that we have, we would have loved a situation where this market break this low a little, catch liquidity, and then move. But it did not come to do so. So this time around, we are believing that this will just be a corrective structure, correcting which move, correcting this to 50% retracement, and then you have a move down. Okay, take this low, come over here, then we'll look for buy opportunity to the upside. Then this structure will be a proper structure, WXY, W, X, and Y. Okay, And then you also discover that at the end of the day, this market will be picking liquidity in this area. That's how I look at the market. I want a situation where this pulls down, pick liquidity here, and then from here, move to the upside. And this will be a proper W, X, and Y structure. It's as simple as that, guys. That's my expectation for USD JPY. So we're going to be preparing for downside. We're going to be preparing for downside of USD CAD. Okay, USD CAD. We want this to push up a little. Okay, after it has pushed up a little, then anywhere here, we'll be looking for downside, because this will be a complete structure. Do you get, guys? So that's it. But I've told you, you are going to see a buy opportunity on USD CAD, but please don't buy it because it can deceive. Okay, it can deceive. Allow this to play out. Let it play out. Okay, let it play out, break this top, then come down. This is the sell you should be interested in. Don't be interested in that buy. NZD USD, guys. Okay, NZD USD, the same structure we're looking for in EU is the same thing we're going to get here on NZD USD. Can you see? Excuse me. So this structure will have to come. Okay, this expanding flat, guys. Excuse me. Let me do it properly. You have three-wave structure up. This is three-wave impulse. Remember, we have three types of impulses. You have a mono wave, which is just a single impulse. You have a three-wave structure, a three-wave impulse, and we have a five-wave impulse. Okay, and if I have to draw it where this is a mono wave, a single impulse, then this is a three-wave structure that can also be an impulse, a three-wave impulse, and then a five-wave impulse. 1, 2, 3, 4, and 5. This is the one that ELLIOTT wave theory taught us and discussed so extensively. This one did not discuss this, did not discuss this, but I'm telling you that impulse can also be a three-wave impulse. Example of a three-wave impulse, guys, is what you have seen here. What is impulse? Impulse is that move that is very fast and sharp that also breaks structure. Look at the structure that is taken. You see, do you see that this is a downtrend, making a lower low, lower high, lower low, lower high? What happened to this one, guys? What happened to this one? It has taken it. It has taken it. And because we are looking for correction, this three-wave impulse will have to be corrected in three waves too, coming back to 50 to 61.8, and you see another three waves or five-wave impulse to end up in ABC or WXY structure. Okay, so what we're expecting right here is that we would like to take this fib of this three-wave move and target 50 to 61.8 on its way back, and look at it exactly at this demand level. Exactly at this demand level, guys. Okay, that's what we're expecting. And then if you see on 1 hour time frame, all we are just looking for right now is this. Look at it. Look at 1, 2, and 3. Look at 1, 2, and 3. What are you expecting, guys? 1, 2, and 3. Okay, this becomes a WXY structure. That is 3, 3, 3 structure. 3 waves down, W, 3 waves up, X, 3 waves down, Y. And then you look left. Do you have a demand level at this structural area? Yes. Look at it. It is demand level because look at how big it developed and broke this structure. So from here, do you have any psychological level at this area or sub-psychological level? Yes, 0.6150. And from this level, expect a move to the upside. Where is the target that you are expecting, guys? The target you are expecting is just take fib extension and capture 100% fib extension. Capture 100% fib extension, you'll be getting somewhere like here. Okay, and then from there, you should expect that you should have a move to the downside. And then if you have it this way, you either have this structure as a running flat if it does not break this top, or as an expanding flat if you break this top to the upside. Do you get now? Then anywhere there, you should expect a move to the downside. But I, for once, would like to see it taking this top. I like to see it take this top, okay, before it massively falls down to the downside. The same thing in AUD, USD, all right? You also want to see that this move to the downside, to the upside right here. Remember the concept of orthodox top. This is not the top, this is the top, guys, okay? You also want a correction of this move down to 50 to 61.8. Anywhere here, we look for buy opportunity to the upside. To do what? To complete this structure. Can you see? Complete this structure and then move down. Okay, it's as simple as that, guys. So at the end of the day, you will see that this area, the whole of this trade here is a correction, and this is the impulse. This is another impulse that is to appear here after this corrective structure is over. Do you understand now, guys? So good. See, in good, 1, 2, 3, 4, 5. Okay, you have achieved a 5-wave structure to the downside on the higher time frame. Okay, but if you agree with me, you see this wave here that comes down, and these 3 waves here that goes up. This one that comes down here is not the same thing as this one and this one. It's not the same thing, and it's supposed to even be more significant, but it's not the same thing. So if that is the case, what we are expecting is that right now, if you look at this structure very well, this is 3-wave structure to the downside, 1 wave here, 2nd wave here, 3rd wave here. And then you have another 3-wave structure to the upside, 1 wave here, 2 waves, wave B here in form of zigzag, and then wave 3 here. Okay, so what are you expecting? This cannot be, this can be still be WXY structure, because right now you have 1, 2, 3, 4, and 5. This is a complete Elliott wave structure. What we are expecting now is 1, 2, and 3. We want a correction back to 50%, and then you have 1, 2, 3, 4, and 5. This will now make a complete structure, guys. So right now, we are focusing our attention not on the downside of gold, but on the upside. But the upside is going to be corrective in 3-wave structure. It's going to be corrective in 3-wave structure. And that if you take a fib of that 5-wave structure to the downside, guys, you are going to achieve not less than 50% fib retracement. And if the nature of this retracement, guys, that you are expecting right here, if the nature of the retracement is zigzag, you are going to achieve 78. But I don't think that we are going to achieve zigzag at this point in time for gold. Okay, so be sure that we'll come back to this area for us to launch upside again. Then how do you get involved? How do you get involved on trading that retracement? And how do you know that this move to the upside is going to come? Let me tell you a simple trick. Look at this push down here. Okay, look at this push down here. When we are talking of divergence, we are interested in the push down in the market. What happened here is just a mere correction in 3-wave structure in the middle. Okay, for us to carry out divergence test, we are interested in this push to the downside, this push here, and this push here. If you look at the corresponding level on the indicator, you have the push here, you have the push here. So you can see clearly that this make a higher low on the price, and right now it's making a lower low. Okay, so this is a sign of either continuation to the upside or a pullback, and this time around is a pullback. Okay, and since it's a pullback, we'll go to the lower time frame and see whether we have ending structure at that level. Okay, those are the things you ask yourself when you have seen that structurally there is completion in higher time frame. When you come to lower time frame, you want to see a structure that depicts, you know, the understanding of a complete structure in the higher time frame. You want to see a structure that depicts it in the lower time frame. And how do you see it? You see it in form of ending structure. This is an ending structure, guys. Can you see? Up, down. This is an ending structure. And I show you, you know, in the trading community that this is an ending structure. You must see a divergence here. Perfect divergence, guys. Look at it. Perfect divergence. And then at a point, you're going to see it break the top. And when you see a structure like this, every lower low is a potential opportunity to buy. And right here, I got in for a buy. Okay, I made a 7K for this trade. I got in for a buy at this level, 1683, because I know every potential last low is a buy opportunity to the upside. And look at how the market shot up to the upside. Now the structure is taking. All we need to do is to allow this correction to start and take a fib. Okay, make sure that the market have a defined corrective structure back to 50 to 61.8, where you are going to take a buy to the upside. It's as simple as that, guys. And I also want to show you how you can use divergence to test if this buy is going to come. If you have gotten it this way, all you need to do is that this is a swing point, this is a correction. If you have a higher high here, on this RSI here, do you have a lower low? Yes. If you have a lower low, yes, you know that, oh, this is a better price, that the push you are going to have here is going to be greater than the one you have here. Because when this was here, it made this push where, look at where the market was. But when it retraces down here, okay, the market even retraces lower than this one. And that's to tell you that we're at lower ends. You know, we have a better discount right now. Okay, and this is the right price to buy. And as long as this stochastic still reset to the low, you take your trade without fear. Make sure that you are able to define the corrective structure. You see, all confluence work together. Break of structure, correction, you know, hidden bullish divergence, and you take your trade to the upside. It's as simple as that. I also like to trade, you know, US 100, which some people call NAS 100, and the structure it has given me is a very simple structure. Okay, you have this running flat, you have upside, I need upside. So I took this upside, and I'm also taking this downside, though I've closed my trading profit on Friday. So why do we think this sell to the downside will come? Why do we think this trade will come? Because we have this impulse here, you have correction, you have impulse, you have correction, three-wave structure, then you need to find out this three-wave impulse, is it complete? This leg and this leg, is it complete? Of course, you have to do trend-based fib extension, drop it here, take it back here. You see exactly 100% fib extension. It is complete. So at this level, I need a reaction. Okay, and you also look at it anywhere you are saying there is structural completion. Okay, you need to check whether there is divergence, whether there is slowdown. You need to check slowdown. Okay, it's very, very important. And you can see that there is a perfect slowdown here because there is divergence. Here we are getting a higher high, guys. Look at the high, look at the higher high, look at the higher high. But coming to the indicator, what do you have? You have a high, a lower high, a lower high, a lower high. That is telling you that the move to the upside is no longer there. And instead, you are going to have a move to the downside. Okay, and if you look at the 8 hours time frame, guys, you have seen a candlestick pattern that matter over here. Look at it at the structural area here. You are seeing a candlestick pattern that matter. Look at it. And I told you that I would like the last bullish candle to come with a rejection, with a weak rejection. Okay, this is a rejection. And look at it, a weak rejection and a move down. So if you step down to 1 hour time frame, you're going to see an impulse as a result of this. And where's the impulse, guys? Look at it here. The impulse has appear here. Look at it, big impulse. All we are looking forward to, guys, is to see a corrective structure coming to this supply and then having this trade move to the downside. Okay, that was why I closed my trade. This move down, I closed it on a Friday because I'm expecting the correction to come for us to have a bigger push to the downside. So these are just the major pairs that I trade, guys. So just the major pairs. We can just look at some of those other pairs. Okay, this structure is a known structure. You have on AUD, NZD, you have 3 waves here. Do you know that this one is a WXY structure because you have 3 waves up? Okay, then you have 3 waves down, 1, 2, and 3. Then what are you expecting, guys? Another 3 waves up. This is 1, 1, 2, and 3 in the middle, and to push up. This is a complete structure, guys, and this is W, X, and Y. Okay, at this level, you can see my lot is there, 1.1150. You are going to have a move to the downside. That's going to clear all this low. Going to have a move to the downside, and how far the move will go. If we do trend-based fib extension, okay, trend-based fib extension, see the move is going to come as low as this level. Okay, for us to think of possibility of any upside. Okay, there is also a test you can conduct to know whether this is just a correction. This is just a correction for more upside or not. Okay, it's just a correction. What you do is simple. You see this push before and this push. You need to go and check whether there is divergence between the 2 pushes. If there is no divergence between the 2 pushes, anything that is formed here is a corrective structure. Get me right. You see the point here of this push. You see the point here of this push. If you come to this level, get a tip on the RSI here. This level, get a tip on the RSI here. Higher level. Can you see? Higher level. Higher level. Higher level. That means that we are not reversing now. That's what it means. That anything you are seeing here is a corrective structure. So we can write it down. We're going to have this as a corrective structure. 3 waves here, 3 waves here, 3 waves here. W, X, and Y. And then we start to move to the upside. Do you understand? How will you know that, you know, the correction here is over? When this one come here, how do you know it's over? You're going to carry out divergent test again. So you have a lot of tools to use. Okay, when you get here, you need to just look at your divergence between this impulse and this impulse. Okay, if you look at it and you are getting something like this one making a lower low here, this one is making a higher low here, you know that this move to the upside is non-negotiable. Is that okay now? You know that that move to the upside is non-negotiable. So that's it about that. Do I have any setup again? Yes. You know, some of these pair I may not trade, but I have a lot of setup on them. Okay. All right. So if you look at higher time frame, you see the move of this pair is down, and then you have a corrective structure here. Okay. This move you have here, you should have it here. Okay. And then can you see that we are just halfway into the move and we are seeing this corrective structure? So what we are seeing here right now is a 3-wave structure as continuation. So what you want is another three-wave structure, 1, 2, and 3 before you move down. Okay, but how is this three-wave structure developing itself, guys? How is it developing itself? I'll show you now. Okay, now you need this last push. You have this, you have 1, 2, and 3. Then you have this one to the upside. And if you go and check your indicator, okay, if you check your indicator, you will see, okay, this one, this leg is over. This corrective structure is done. You have this push to the upside, you know, that already broke this structure. That's valid with A. This is a correction valid with B. And then all you need to see now is for wave C to come into play. And then why must wave C come, guys? If you look at this low, high here, you see equal high. This equal high, guys, must be taken to the upside. Take liquidity here and have a move to the downside. So my alert is set at 0.8150, okay, as a possible level to achieve sell opportunity to the downside. Okay, last but not the least, before I check your question, is CHF JPY, guys. CHF JPY. This pair, before we can look for any buy opportunity or anything, we need to make this structure come back to this level, and we'll check what happened between these two pushes to the downside. Okay, if we check what happened between this push and this push, if we check our RSI and we see that there is convergence, there's agreement between price and indicator, then this is making a lower low here, and this is also making a lower low here. Okay, then we know that we are going to have a corrective structure here and a push down. Bye to the upside in that case. Okay, so that's my thought on CHF JPY. But mind you, there is still going to be a pullback. There is going to be a pullback of this pair, and there is also a possibility of a deeper pullback. I foresee a deeper pullback because right here is a demand level. We could see a deeper pullback to take liquidity here. Okay, a deeper pullback to take liquidity here and push down again. I foresee that to happen because this level here is a big level for a buy. Okay, it's a big level for a buy. The market is not going to play here and say no, going to go back up, take order, and then push down again. That's how I see CHF JPY doing. Then BTC. Somebody say BTC, yes. I'm seeing a possibility of this move in BTC. You know, when BTC was here last week, some of us took a trade on BTC and I posted it on the group because you have this corrective structure move. You must have this move. Okay, based on theory, you must have that move. And then that's 4 hours. If you go to 1 hour time frame, no, let's go to 4 hours and check something. Like to check for something. Okay, I like to check for something. Okay, all right. So 1 hour time frame. What I want to check is not there. 1 hour time frame. You see. So if you want to be a day trader, if you want to be a day trader and a good one at that, if you are good at Elliott wave theory and forecasting, what you just do is that since you are forecasted on a 4 hours time frame that this wave is going to come, let's say when the market was still here, yes, you are forecasted that, oh, this is a corrective structure and you are going to have this wave. All you just need to do is to now look at how the wave is going to develop, how the trend is going to develop. And if you go to 1 hour time frame, which is better to use 1 hour, since as a day trader, you see that this market was coming down this way. Can you see coming down this way? This was potentially, or not even potentially, this was the last high. But look at this wave here. It has taken that last high. This gives you, this gives you an understanding of what you have to expect next, because the structure has been taken already. Structure is already taken. All you need to do, guys, is to take a fib. Okay, 50 to 61.8. Take a buy opportunity to the upside. And then when you look at this push to the upside, and look at this push to the upside, you need to check divergence. Okay, check your divergence. As you are making a higher high here, are you also making a higher high here? Yes, you are making a higher high. That means that you are not coming down for now. Any pullback here, any coming down here is a pullback. For what? For more upside. It's as simple as that. You need to check again this push here and this push here. Check the top here, check the top here. Do you have a divergence? No. Making a higher high, making a higher high. So meaning that any pullback you see here, any coming down you see here is not a reversal. It's a mere pullback. And then you have what? A shoot up, a shoot up. You need to check divergence between this push up and this push up. Let's check. You see, higher high, higher high, meaning you are not coming down yet. That's what it means. Can you see? Now check divergence between this push up and this push up. Okay, can you see that? Can you see something very significant? Higher high, lower high. Can you see, guys? Then at this point now, as a day trader, you know that you cannot buy this pair again, because it's beginning to develop a move to the downside. And what do you see? Structure is already complete on higher time frame. You see this break of structure. Can you see? You see correction. You see break of structure. What we are expecting is correction for a move down again. So how do we get this correction? We now have to take a fib, guys. You take a fib, this level to this level. You know, you had three wave structure, zigzag to 78, pulls down in three waves. Right here, what do you have to do, guys? You take a fib of this push down that broke the structure. Take that fib. Where do you target? Target 50 to 61.8. Where is 50 to 61.8, guys? Okay. You have this. If you have a three wave structure that come to 78, better take it to the downside. It then means that you are projecting yourself for this structure here. Move down, correction, move down, correction, push down again. Okay, why are we thinking that this is what will happen? And why don't we think that this will just be a three wave structure for the upside? Why don't we think this will move to the upside? Okay, I'll show you now real quick, guys, why we think it will not happen like that. Okay, why we think it will not happen like that. Look at this push, guy. Look at this push. I told you divergence is measured between two impulses. All right, divergence is measured between two impulses. Look at the corresponding level on the RSI here for this end of this impulse. Look at the end of this impulse. Look at corresponding level on the RSI. Do you notice something that is very instructive? This is lower low here, and here you have a lower low. What does it tell you? There is no divergence. So that is why I don't expect this move to the upside here. No, what I'm expecting right now is just because we have a convergence, then we should expect a three wave structure here, a correction of this move, and then we have a downside again. All right, you have a downside again. Do you understand? And by the time you are having this downside, then you must have this raise to the top. If it's raised to the top above this level, it means that you are having a higher high here, and you are having what? A lower high here. That will be a high probability setup to the downside. We'll look to that. Okay, guys, so that is it about BTC, and that is it about my outlook for this week. this is how I see the market. This is the behavior I expect. This is the pattern I expect. Of course, as the week, as we start the week, we keep on checking the market to see if the market is reacting the way we forecast. So yours, every analysis I've done here does not in any way constitute a setup or a trade idea or financial idea or whatever. All I've done is to guide you on my expectation. And if you see that what I say will happen, if it eventually happen, then you know that my analysis is right and you can take decision. Are you okay now? So that will be the end of the weekly outlook, guys. I will be happy if you subscribe to the channel and then share the videos, share it and press notification bell if you have not done so before, so that you can receive much more content from me. Okay, guys. So see you next week. Peace.
Thank you so much, sir. Thank you so much.
Yeah.